Now, with the knowledge that I have now, it would be a completely different setup. It was a very nice win-win situation for both, right? You have to be very cautious in partner selection. Take FTX. I mean, even though it was a super interesting platform for hedging and for liquidity provision, it never made it through our compliance checks.
Hey everyone, welcome to the New Money Podcast, the show where we talk about crypto and hopefully find out how the future of money exactly looks like. Behind me I have the Lydian Lion as usual, which is essentially the oldest coin in the world. And in front of me I have Ulli, co-founder at Bison, who's working at the very frontier of this industry. Ulli, great to have you on the show.
Yeah, thank you very much for having me, Ferdinand.
No, great to have you. So Bison is one of Europe's largest crypto exchanges. They were the first to get the MiCAR license in Germany. And they're this unique venture story. It's a spin-out from Börse Stuttgart, which is essentially one of the largest European TradFi exchanges. And so Ulli started the business in 2019 and kind of turned it into one of the most exciting TradFi and Web3 partnerships that I know of. Ulli, we've been talking to a bunch of people from your team and they've been telling us you're 6'6", you've played a competitive basketball, you own and ride a motorcycle. Would you say you're a natural risk taker?
Well, it's interesting what I say about me. Well, I think if you are an entrepreneur, and I certainly would consider myself being an entrepreneur, I think there is a certain risk profile that you have to have. It's not like that you need to evaluate a certain decision for weeks. It's rather that you come to quick decisions based obviously on certain ground that needs to be good. But then if this is given, I would consider myself rather on the more riskier side of things. Yes, I'm not sure how this connects to riding a motorcycle or sports, but obviously in basketball, it's all about quick decisions. So yeah, maybe a little bit of a bridge to the sport and motorcycle thing. However, I do not ride the motorcycle on a race level. It's rather for chilling through beautiful landscapes.
That's good to hear. And like, if you reflect on your career, what was the biggest risk that you took?
Biggest risk is tough. I think if you start your business, you go into a lot of risks that you have to consider. First of all is being on your own and being dependent on your own. I mean, always having in mind that your personal failure or not failure directly impacts your personal life. But I never considered that as a big risk, to be honest. So the biggest risk that I was back then really afraid of is with joining forces with Börse Stuttgart back then, because it was tough for me to evaluate how the company would actually then behave after they acquired my company. And there's a lot of things that you can tell somebody, but then there is the risk of actually living up to it. And luckily, that was a risk that turned out very positive, I think, for me and also for Börse Stuttgart Group, because they really want to move things forward. And I've seen it in the industry that other acquisitions of fintechs or other companies that are being acquired are then just an acquisition to be brought to an end, so to say, in the innovation process. And luckily, this didn't happen.
Yeah, and I'd love to unpack that a bit, right? Like your company, the acquisition and everything that happened after that. So I think kind of like for the broader audience, for context, I mean, Stuttgart is this kind of like peaceful, mid-sized city in the south of Germany. Börse Stuttgart was founded roughly 150 years ago, 1861 if I'm not mistaken. And so I think this is like this big kind of interesting question. How do you mix these two ingredients together and get one of Germany's leading crypto trading apps and all of the exciting digital asset things that are happening around it? So maybe if you walk me through the brief history of the partnership, like what was your company initially about and how did you get in touch with the folks at Börse Stuttgart and why did you decide to sell?
We actually founded the company so my background is research, and founded the company in 2013, basically as a spin-off from a European research project that I was leading for 3 years. And the initial idea, since my background is trading and more focused on stock trading, it was for me a very important thing to have all type of information that I could use for taking better trading decisions, making more out of my decisions when I trade. And back then in 2010 or even before, there was lots of news and information on the internet, on social media, Twitter back then. But there wasn't a way of how I could structurally, in a structured manner, get access to all that data and aggregate it and then use it for, let's say, trading decisions. And basically that was the idea back then. So we acquired vast amount of data from the internet, from social media, aggregated it, and came up with trading indicators that we were then using for trading decisions. So the first and initial focus of the company was actually to generate that data and then sell it to hedge funds and other companies. This is how it started. And then, since my co-founders are from Slovenia, and in Slovenia there is the oldest European crypto exchange with Bitstamp. Crypto in Slovenia was always way ahead of what happened in Germany. So in 2014, my co-founder basically said, look, everything we do here on the equity side of things for stocks and stuff, we should really do that for Bitcoin and crypto. And I was like, what exactly is Bitcoin? And and then initially my first thought was like, no, come on, let's stick to our product, let's stick to our core values here in trading stocks and equity. But then I kind of like changed my mind, or they changed my mind, and then we started acquiring all that data on crypto, and started using that for trading in crypto, which worked out much better than in the stock market, because stock markets are super efficient, so you have to be really at the edge of the information process, which is difficult because you have all the high frequency trading companies in there, and information is really difficult to generate alpha in stock market. But the crypto market back then was super inefficient, so there was a lot of intransparency, and apparently it worked much better in that space.
What was Bitcoin market cap at that point in time? What was like the rough price point?
The market cap, I don't know. We were like around 1,000 euros, I think, back then. So then we started doing that and realized, okay, that actually works much better. And then we focused more on the fact, okay, let's go from generating data to really use the data for trading, and then went into, okay, we should develop trading systems. And then we were growing and had quite interesting customers. And we actually were looking for VC investment, but then Börse Stuttgart was like, hey guys, this is exactly what we're looking for. So have you ever considered partnering up? And this is how it started then with Börse Stuttgart.
Yeah, and I mean, walk me through that decision space, kind of that entrepreneurial decision space, right? So what were the options, right? You were kind of like fundraising and you would have raised a venture round, or was there opportunity to further bootstrap, or was there kind of like the Börse Stuttgart option where the other acquirers? Where was your head basically at that point in time?
Back then we were actually already in talks with two kind of like strategic investors who were more focused on the data part. We felt internally much more interested into that trading side, and really, also into the crypto side. And I think the crypto market is back then was super interesting, but it had one huge shortcoming, which was the accessibility. And I went to some of the crypto conferences or Bitcoin conferences, and people were telling me, okay, so what do you think is the biggest issue of Bitcoin? It's not scalable, or back then there wasn't the Lightning Network wasn't there yet, and they were discussing technical problems, and then they were super surprised, because I was always like, the biggest problem of Bitcoin is that nobody really cares about it. there is no interest because the technical setup and the technical understanding that you have to have, particularly in terms of custody, is so complex that it's really not mass marketable. And this is something that I was always like, okay, it's a really cool asset class to invest and also to trade with. And a lot of people will be interested, but it's just too complicated to get there. Why don't we come up with a super easy solution on a mass market scale to really get into that asset class for everybody? And that kind of hooked me, and we were more like, okay, we really want to do something on the trading side of things with crypto, which then brought Börse Stuttgart in, who were also interested into the data part, but obviously had this connection of access to traders, access to the trading industry, and then we just kind of like did a premature exit, so to say. Yeah, it wasn't this unicorn exit that every founder or every entrepreneur would wish for, but it was a very nice, let's say, win-win situation for both, right? I mean, we exited, it was a decent one, not a unicorn status, but still with a super interesting journey ahead. And as I mentioned before, Börse Stuttgart was always in the talks that we had, they were super innovative thinkers and really wanted to move ahead. And they also, the background that they have over the last 30 years, their history kind of like is always be more innovative than our competition, because we have to be. We are not the largest exchange in Europe. We are among the, like currently I think we're the 6th largest exchange in Europe, but we always need to, be different than the rest in order to catch up and have that edge. And this is what really interested me. And the people back then, at the end it was a people decision. Back then it was Alex Höppner who was the guy who really convinced me, and another person on the supervisory board who were super strategic thinkers. And it was back then for us a people decision, so to say.
So you have this kind of like opportunity, and you're excited about kind of the challenger mindset, the underdog mindset of Börse Stuttgart and how they approach these things. And like, how do you structure the deal? Did you exit fully? Did you keep some ownership to have some skin in the game? With like the really exciting thing is the journey ahead. Like, how did you kind of try to structure that in that moment in time?
Yeah, that was actually the big shortcoming or the downer back then, because from a strategic perspective, the group's position here is to acquire. It was core strategy, and they wanted to own 100%. So that was a little bit the downer, because none of the team really wanted to exit completely and have skin in the game. But we have some. We came up with let's say, some smart idea of how to still be motivated. Yeah.
No, that makes sense. And now you're kind of like. You're excited by the kind of like your perceived upside, right? You have these amazing people, they're intellectually curious about the crypto opportunity, but still, like as you said, you perceive that risk of them not following through, right? After the acquisition, in the kind of implementation part, like how do you manage that risk? What did you do in these kind of like weeks and months leading up to the deal to kind of try to mitigate that?
Yeah, I mean, I think one of the smartest things we did is that we actually brought in a consultant who is not a consultant per se, but a guy who had his own company, his own startup, did a really nice exit, and is now in the VC business, running a set of funds, really large ones. And we, over personal connections, because I knew the guy, we were actually using him or asking him whether he could help us in setting that up. And that actually helped a lot at the end for both sides, to be honest. Because if it's your first, let's say, exit, there's a lot of things that you do not consider. And then also I had really good strategic advice also from a legal and tax side of things. There's a lot of things that you need to consider in order to optimize the deal for you, or for both sides at the end. And usually it's a little bit a conflict that one party wants something different than the other, but then you just have to find a common ground. And I think getting in an external advisor on that one that is really good and has done it like a couple of times before is really helpful.
And so you get the external advisor, you get the best lawyers, and now kind of only for all the founders, execs out there that are selling their company, like what was the number one thing you learned? You kind of like, maybe you made a mistake that you would kind of like pass on to future generations. Hey, look out for that.
I did the mistakes before, way before. When we set up the company, I set up the company with people that I do trust and people that I really thought could leverage us as a company with the goals. But I brought in way too many co-founders. So we were 7 co-founders. Some of them initially were more strategically. Now, with the knowledge that I have now, it would be a completely different setup. And I would more go for like 1 or 2 co-founders max, plus then you would actually find a lot of business angels. You would pool their interest into a fund and become the fund. So the fund basically becomes the second or third VC share, that you don't have this kind of like weird, absolutely weird cap table that at the end is a problem for a lot of other following investments. But that's certainly one of the biggest mistakes that I did.
No, that makes sense, and appreciate you kind of like walking me through this. So now we've got a deal, and we're kind of executing back again right now under the hood and umbrella with Börse Stuttgart. If you reflect on the time kind of like running these businesses now, where was the connection to Börse Stuttgart for Bison specifically? Where was that like a unique and unfair advantage to the business?
I think Börse Stuttgart had built up a really, really good reputation on the retail side. Their products that are traded here, I think currently over 2 million products. They're specifically focused on structured products, so structured derivatives. And these are products that are typically traded by retail investors that are keen on investment possibilities, keen on various asset classes, and always keen to generate a lot of alpha. So the Börse Stuttgart is not any exchange in Germany is not allowed to trade with retail investors. And I think this was also, from a strategic perspective, something that the group wanted to change. They wanted to have somehow a direct exposure to the clientele that are permanently trading on the platform, but as an exchange, you have no access. You just know the bank, the order flow provider behind, and you know there's a lot of flow coming from broker A, B, or C, but you don't know the persons behind. You don't know Ferdinand, you don't know Ulli, you don't know the guy who really placed the order, and this is what they wanted to change. And the great thing was that they have built up that reputation for years, like more than 10, 15 years of excessively working with retail investors. They had in 2012 or so, or 2013, they had Bastian Schweinsteiger back then as their testimonial, and that brought a lot of interest on the retail side of things. So it was really a large target group of potential customers for the crypto space already connected to Börse Stuttgart. And one thing that the crypto space was missing back then a lot was trust. If you're into crypto, and I don't know when you started, but I remember when I first started, I had to send money to some Eastern European bank, and I was really scared to will I ever see that money again, or will it actually be there? Is it a scam or not? It just feels uncomfortable, and 99% of the people that really want to invest significant amounts, we're not talking about some long tail, very young clientele, but 35 plus, 35 to 65 is our core target clientele, and also our customer group at the moment. Those people invest 5, 6, even 7-digit numbers, and they want to have a trusted party with a 160-year-old history, based in Germany, regulated in Germany. Actually, those people are really looking for these kind of factors. Where is it located? How is it regulated? Will I see my money again? What happens if shit hits the fan? Is there something I can do? And this is, I would say, the unfair advantage that we had and we still have. Reputation of the group and powered by Börse Stuttgart Group is a changer or something that other fintech startups cannot really that quickly let's say catch up with.
So you say you have brand and trust and kind of like the following distribution through that. In terms of product and kind of platform, was there anything that was kind of like uniquely valuable?
Actually, that was so the biggest success doing it was Börse Stuttgart certainly was a big enabler, but to the same time, I would say a lot of discussions that we had was also a lot of downers. Crypto markets are going 365 days a year, 25 hours a day, 24 hours a day, sorry. We were not allowed to start 24/7. And I was like, guys, how can you not let us start 24/7? The systems and everything we set up is perfectly set for 24/7. It's all by design because the market acts like this. It's all designed like that. Yeah, but we don't know what if something goes wrong. Well, then if something goes wrong, we have alerting. We have people on call duty and everything. We can cope with it. No, it's too much of a risk. So we start 7 days, but only 18 hours. And then you have to massage the people to really. I mean, they really wanted to be innovative, and they are. But then obviously they have, and I like. To be honest, I like that fact. They have a very, very conservative thinking about risk. And the top thought is, this is not our money. We do not want to gamble or do anything stupid with our customers' money. And we need to have everything 100% safe, 100% secure. And this is why we had this gradual process in the whole product development still of today. I remember in 2018, when we set up the product, I was already talking to Celsius, Alex Mashinsky back then, to integrate the lending part into the app already. And I was like, I find it super interesting. However, you need to answer some questions, and they weren't really able to answer these questions back then. So it was clear from the start that this didn't work out. So
sometimes it kind of like saves your ass and the conservative view is the right view.
Take FTX. I mean, even though it was a super interesting platform for hedging and for liquidity provision, it never made it through our compliance checks. So we never had any exposure there, which is at the end now great that we didn't. On the other hand, back then there were a couple of months that I was really thinking it's such an interesting place for a liquidity venue for us. It's a pity that we cannot tap it. So it's always pro and con.
How do you feel about kind of like the zoomed out view on the risk profile of kind of running such a venture, right? Like you have the FTX, you have the Celsius examples where it's just great, okay, right? Like these people didn't pass, they shouldn't have passed, it's great. By and large, would you say you should be able to kind of like take more of these bets as a crypto company, or is it kind of like really like a good discipline to apply to any financial services business?
No, I think you have to be very cautious in the partner selection, and I'm more on this conservative side of things, where I really would consider, okay, who do we partner with? It never is a 100% security that nothing happens. I mean, anything can happen to any party, and you're not in the details, right? So you have to be cautious on that, and I'm more on the conservative side of things. And I think with the core customer group that we have in mind, they actually appreciate that, and they know it.
Got it. So basically kind of like distribution, trust, brand, kind of like the major upside, product development, much more conservative view than kind of maybe would come natural to many founders, but in the end might be valuable as well for the long run. You mentioned kind of like in the beginning, hey, you had this concern that the execution and delivery on the acquisition wouldn't be as great as the initial vision was, and then it turned out to be great, and both parties were doing really well from that. How relevant are digital assets now for Börse Stuttgart? Can you give like a ballpark top line percentage, something like that?
Yeah, it's an absolute core strategy. It has already been the core focus since 2017 with the acquisition. Now, I mean, we are on last year, I think, on a group perspective, I think 25% of the top line is on crypto and digital assets. Plus, I mean, crypto is the major part. What will play a significant role is the digital asset part. We have set up in Switzerland a digital exchange, which has just last week received as a first exchange in Switzerland a DLT license that actually enables you to issue, trade, and custody with one license digital assets and also cryptocurrencies. The idea is basically to go more into the digital asset and tokenization space here, take the tech part from Switzerland, and then we're already, let's say, evaluating how we can, let's say, roll it out across Europe then.
So now you're like 25% of the top line. How does that change kind of like your role in the broader Börse Stuttgart organization? And like, how did that feel and how did that change kind of like the way the group is run as this goes from zero to something, right?
Yeah, that was the super interesting part, and that was the risk that I feared back then when we basically sold the company, that there is a lot of promises and then no delivery. But I mean, at the end, when you sell, you always have an earn-out period, or most of the time you should have one, at least from a buyer's perspective, it's quite logical to have it. And I was like, okay, I'll just have a look how it goes over the next 2-3 years, and then let's see what happens. And then from the acquisition, already 2 years later, they made me part of the group managing directors. I became CDO of the group, and now in 2022 I'm now on the extended group board. There's like 5 people in it, and one guy is responsible for the traditional side of things. I'm responsible for all the digital business. So you can already feel that it's a level playing field within the group, that digital assets and crypto are considered as important as so to say, the classical traditional part, even though the classical traditional part is the one that is still on a bigger scale, the major contributor on the group. And I'm 100% sure that it will also stay that way for another, let's say, a couple of years, because there's also growth on the traditional side of things. I think when we started and when we sold, so in 2017, we're now almost 3 times the people on a group level that we were back in 2017.
And kind of like speaking of people, and I looked at this kind of like mini CV within the group, and you were kind of like in obviously banking, finance, product, digital management roles, and then you took over HR, right? And kind of like you took over the people function. Why was there the need to do so, and what was your vision for that part of the business?
I think it was also it wasn't my decision. I mean, at the end, I was asked whether I want to take it, and then I said yes, of course I will. It's rather the mindset that we have now in the management, and I think what the group was seeing is that we had a very positive track record on the teams that we were building up on the digital side. We were also attracting a lot of young talent that is really, I mean, the way we set up the digital side of things, it's still like it's not a startup, but it's like this fintech spirit, this entrepreneurial. This is still part of that digital side. And now we wanted to move part of that also towards the group, and that all starts with HR. And it's a longer process that you need to have to do a transformation project, but this is something where they said, look, if there's somebody who can actually do it, I think you should do it. And I was like, okay, look, then let's do it.
And how did it go? Like, what's the
Very
reflection?
good. I mean, from my perspective, we are now set up across Europe. We have different hubs from Stockholm, Berlin, Frankfurt, Stuttgart, Zurich, Ljubljana, Madrid, Milano. We are a European company by now, which was the ambition also from a group perspective. The kind of talent that you can acquire has changed. The brand has changed because a lot of people in the past were thinking, okay, I will have to move to Stuttgart and I then work here. It's absolutely different. So we are hiring across hubs across Europe, which really helps. What we are not doing is basically complete remote and let people sit wherever they want. You do have the possibility to go for a month or so abroad and do workation, so to say. But what we really installed are these kind of hubs where we have offices. People should go into the office, not every day, but to meet their peers, to meet their colleagues. This kind of like strengthens the also the internal brand recognition and the company that you want to work with. So I'd be super interested how you guys are doing that. I mean, there's different approaches, and I know companies that are 100% remote can work. We saw that in COVID it worked, but now I have the feeling that like meeting physically in the office is something different.
I think so too, right? I think there was this like massive vibe shift, and I think we're back in the office, very much so. So I don't know, like Ivy started during COVID, right? And we started out as a default remote company. And also I think like not even out of necessity, but also like kind of out of belief or zeitgeist. I think this was like the kind of company and kind of team to build back then. And I think we've kind of really turned around on that belief. And we've invested a lot of time, energy, and money to kind of relocate people, get a great office in Berlin, and really make sure everyone's around. And for us, really 5 days a week, right? Many even 6. And so I think I do think the earlier you are, right, the longer you can capture that sort of culture, right? Which is essentially what you're saying, right? Like even if you can some way transport it into a 150-year-old organization, that is an asset, right? And I do think that asset is like most materialized through in-person work and in-office work.
I think that's actually interesting, and if you look at like Silicon Valley companies in the spirit, there is like 996, so from 9 to 9, 6 days a week, which is if you really look at successful startup companies or fintech companies, then it's, I mean, the level of work and it's not work, it's hobby, it's like what you want to do. There isn't any hobby that you would probably want to do more than bringing up this company and have success. And if you have that mindset, and I think here in Germany you do find people like that, but overall you have a lot of large corporations where people are just like, I'm also fine if I do 35 hours. So
yeah, you got to train them, right? And you got to build a new narrative, I think, around that. I mean, we do our board in the States, and I was in SF last week, and I think what you said, right? Like I think this really stood out to me. I think I had this observation, right? Like nobody works harder than us Germans, right? Like nobody slaves away like us Germans. I don't know, like we grind it out. I briefly worked at McKinsey, and there was always this joke where that like the German McKinsey teams, they were just like grinding it out more than anyone else, right? And you kind of like you work really late, you go to office very early, all of these things, and then so when I went to SF, I noticed this difference where they work a bit less and a bit less hard and grindy during the week, I'd say, but they all work during the weekend, right? And for me, this was kind of like just like a manifestation of this integrated nature of their work, right? Like for them, it's, you know, they just live that shit. Of course, they go to work during the weekend because it's just their life. And so they have this way more integrated way of thinking about it, whereas I have the feeling like the German, the Central European way is still very much like, hey, I'm not allowed to rest during the week, but I'm not allowed to work during the weekend, right? There has to be this like clear separation of these two things, and this is the healthy thing. And I don't know, like in a way I operated that way as well. And so I started to kind of like question that a bit. And there are a bunch of things how the kind of like top value startups manifest is, for example, many of the great teams and many of the like top tier teams, they work from like a private home. Right, like so they have this kind of like hacker house type. They have like they raise some money, they buy like a villa or they rent like a villa, and they just work and live there. And so I think it's like overall like a couple of manifestations of this like much more integrated way of working and living, which makes so much sense to me, right? Like because if you're building something that is fun, and that is I think large part of what makes the human experience kind of like worth it.
Absolutely, but obviously it also depends very much on what kind of stage the company is, and the larger you grow, the older you grow, the older your peers and your employees grow, the more different is the so to say the need. I think it's a great idea to, if you're a startup and you're a bunch of people that are just enjoying, this is your hobby, to bring up their company, renting a villa and working there is perfect. But then you get into the situation where you have people with kids, and then there's different needs. And a couple of like when I finished my university degree back in 2008, some of my friends also went to Google, and I visited them in Dublin, and they had this like this insane infrastructure for everybody to live there. You get food and drinks and sport clubs, and everything is organized. Basically, it's the villa next level, which also includes then a type of like a family style possibility where you can have kids. Kids go to the kindergarten, schools, everything is taken care of. Obviously, this is something that really helps productivity for the company, but it also costs an immense amount of money. So you need to make that top line revenue to be able to do that.
Yeah, you got to be a high revenue per employee type business, but I think that's what we're all trying to do, right? I think so kind of like to sum this one up, and I briefly want to talk about regulation. We've got like a bunch of kind of like TradFi CEOs, banking CEOs, execs from traditional finance, right? And all the companies listening, like they want to do what you have done, right? They want to bring the kind of like Bison spirit, they want to bring the fintech spirit into larger, older, more established organization. What are like, and we talked about location, but what are like the top 3 things you do, right?
It's tone from the top. The management needs to be aligned and live it. And then you need to kind of have that mindset across the company. If that is not the case, it's very difficult. You can invest in a lot of measures, but it doesn't really help if you don't have the tone from the top.
Hey, helpful. Regulation. You're deeply involved, obviously, I think, right? Like you're one of the voices that shaped the discourse around MiCAR and everything that led up to it. MiCAR, do you think it's by and large a competitive advantage for Europe, or is it regulatory overkill at this point?
Up to last November, I would have said yes, it's a competitive advantage for Europe, and you could have seen it in the past. I mean, obviously, what happened in the States with the back and forth with the former government in the US and the SEC and the crypto industry there was just a very good example on if you are not aligned on an industry, it's really easy to not give it the ground to grow, the necessary soil to grow, so to say. And I think in Europe we had that advantage that, at least from a regulatory perspective, we had this MiCAR coming up, and the boundaries are clear, and it really did a lot of good in terms of institutional adoption over here, because once it was clear that MiCAR is coming, a lot of tier 1 banks, financial institutions were thinking about, okay, now we know how we have to behave on a regulatory perspective, what kind of licenses to get. And also it's kind of like once there's a license, there is basically, it's a legit business. It makes it, sorry to say, before it was kind of like the wild, wild west, let's see what happens. Then it becomes regulated, and then it also somehow becomes legit. And this is what happened in Europe and was good. And you could see that quite some investment also flew away from the US to Europe. Now, after Mr. Trump being in charge in the US, I think you can see a strong shift in the focus also on entrepreneurs on our side, focusing much more on the US, because it's just the juicier place to be when it comes to investment, right? I think one thing, maybe we're good on regulation in Europe. What we're certainly not good is investments or VC investments. And I think it's just much more interesting to focus on the investment perspective from the US. And then also, obviously, you need to consider if you want to do your business over there. And from my personal network, I see a lot of, let's say, focus and interest westwards towards the US. And so it's questionable on the regulatory side of things whether this has now boosted us. I wouldn't say boosted, but it helped. But the question is, how are we going to proceed? So is the regulation now turning into this, okay, you can't do this, you can't do that, you can't do here? I mean, it's really up to how are we going to develop the next regulatory iteration process.
Who's the politician in Europe or the political group or political party that would most drive that?
In Germany, it was a little bit on the liberal side of things, which are not anymore part of the government and in Europe, I think, you tell me.
I had to ask you. How do you feel about the Trump administration? I mean, purely from a crypto point of view, do you feel they deliver on their kind of crypto agenda?
Personally, I'd say you have that president that really tries to stick up to what he said, which is quite surprising in these days. And with the whole thing about, not our topic today, but with the whole thing about Ukraine, you could also see that even though he says and wants something, it's not necessarily what others want, and it doesn't happen. I think now back to crypto, he has it, I think he did a smart approach on taking it with the executive order under control, in a sphere that he can actually influence. He could have come up with a law, right, that would then be manifested and maybe hold for a longer period. Instead of that, he was working with the executive orders, which I think was a smart move because he did execute on it. He said, I'm going to have that strategic crypto or Bitcoin reserve. He did it, and I think he's now taking the time, 4 years track, or that is really quite a long time in terms of crypto development, that actually the industry can develop. And then in 4 years, it will be much harder to argue against crypto and the crypto industry than it is now.
I agree, and I think one of the interesting things that the administration is doing is this public-private partnership, right? Pulling in David Sachs, pulling in a bunch of kind of very accomplished operators from the private sector to kind of lead these initiatives, lead these policy initiatives around crypto. Do you think you would be up for something like that somewhere down the road in Germany and Europe?
I mean, he's a businessman, and I think the mindset in the US is a complete different one than over here. I think a lot of things that he actually did over there, well, basically, if you would do it in Germany, you'd be already out of your office and over the news because it's also questionable. I mean, what kind of like benefit he has now? His son's going into crypto mining now. It's always the German mindset is, I think, a bit different. I don't know about the European mindset, but I think we're in Germany here, so not sure whether this is going to happen in Germany.
Got it. Hey, I mean, looking at the time, I want to do a bit of a lightning question round, kind of about 7 quick questions. What's the hardest truth about crypto that no one admits?
The majority of coins is worthless.
Got it. You wake up tomorrow and crypto doesn't exist. Bitcoin's at zero. What's your next move?
It's not going to happen.
Who's the best crypto investor?
The one who's happy with his investments.
What's something you've changed your mind about recently?
The European pole position in crypto after Trump came into the office.
Awesome. Hey, Ulli, thank you so much for joining us. This was epic. Appreciate you kind of like walking me through the whole journey and then diving deep into the business. Thanks for joining.
Thank you very much. Really appreciated it.